Hey, currency kings and queens. I wanted to go over how to do top-down analysis in multiple time frame confluence. As we know, the higher the confluence on trades, the better your probability is of winning those trades. So let's go over how I typically mark up my charts in order to get higher time frame confluence. So here we are on Euro USD. It is defined by pip. So if you do NAS 100 gold, or if you need type of those traders, same type of markup, but it's just a different currency. So here I mark up my higher time frame with my swing highs and swing lows. As a reminder, yes, we are on a daily time frame. So that is my swing low. This is my swing high. And how you determine that is you look up the most recent time frame and you mark up the high and the low points of that area. As you can see, we're in this frame of the charts right now. So the highest point is here and the lowest point is here. So as you can see, we are in that range, kind of like in the equilibrium or the middle of that range, which is what the key thing in doing is, I know it's a daily time frame, it's going to take a while to play out sometimes. And even though this is marked up on the daily time frame, you can also drop down to your lower time frames and get your trades. If you have confluence on multiple time frames, that is key. Confluence means if you have a trend that is trending higher highs and higher lows, so we're going to consider this an uptrend on the daily time frame. If you have an uptrend on your lower time frames as well, that is what's called confluence. Confluence will influence your trades in a great way. So this is the daily time frame. What we would look for the trend to do, since we are still trending to the upside, is potentially this trade will go up. Remember, it never just happens this way. Break and close, that is key. If the trend is closing above your previous high, we want to see a retest. Now your retest can be here, or your retest can actually come back into your area. So it just depends on what strategy you trade and how comfortable you are with your price action and market structure. Remember, that is the basis of knowing how to trade. You need to know market structure and price action. So the trend could do one of those two things and then continue in the current direction, which is up. So if you have an uptrend, that is a possibility that that's what you have. The key thing in this process is to know when to get in. Remember, if you're having an uptrend, you want to buy low, sell high. So we would look for entry somewhere here. And then we want to take profit at your 2 to 1 or your 2 to 3, whatever your risk to reward is, and get out of the trade. So another thing that could happen is it could go into the opposite direction and reverse. So being that we have this structure here, which is if the market comes down to that area, it breaks that structure. So what you want to see in that case is pretty much the same thing. If it's coming from this direction, you want to see it push and close below support, retest, okay, you'll see the market push below and close, retest the area. It could go here, it could go there. Just be real open to how the market could potentially move, because remember, it moves how it wants to move, not how we want it to move. And then it doesn't want to go back. Let's just erase. It did this on the last one. Okay, let's see if we can get it this time. Break and close. Go back in. It may just not. Okay, there we go. And then we'll head down. But remember, at that point, we have a break of structure, and we should be looking for a trend change or It may just be grabbing liquidity. It could be doing a lot of different things. So that is your higher time frame. Now let's erase that, but keep our swing highs and swing lows marked up. But let's go down to the confluence, the time confluence. So we're on the daily right now. As you can see, we still have our swing highs and our swing lows marked up, and we are currently in an uptrend. Let's drop down to your 4 hour. Your 4 hour time frame needs to align with your higher daily time frame. So are we on an uptrend here? Kind of subtle, not really like, yeah, it's an uptrend, but it's really subtle. So what you need to do is, trend lines are very helpful in these cases if it's subtle and you really just can't see. So from one point to the next on the trend, your trend line should touch. So is that showing a higher high, higher low? Yes, but it's, like I said, it's really subtle. It could be, as you can see, the push down could be the retracement from the daily push during that retracement. So it could be this little area here. So you have to be really careful about how you read the market so that you can put 2 and 2 together. Moving from your, let's finish one more thing on the 4 hour. So as you can see, we have the swing highs from the daily and the swing lows, and we're within that range. Let's drop down to your 1 hour time frame. Your 1 hour time frame is still marked up with the trend line, and as we saw, we just zoomed in, but we still have our higher highs and higher lows marked. And then we're gonna look at the 15-minute to see if we can get a sniper entry, which happens a lot of times. Your sniper entries are gonna come with paying attention to the actual market. Now, as I said, on the daily time frame, we are probably 50% level on the daily time frame, meaning that we are in the middle of the swing high and swing low trend. So we are pretty much at the equilibrium of that trend. So you could potentially take trades here. I would only take buys. If you have a trend, you need to stick with the trend as far as the execution of what you take in order to not counter trend trade, because it is higher risk than your typical going along with the trend. So you could swing down or drop down to your 15 minutes. Some people take a 5 minute. Some people look at the 30 minute. It just depends on what strategy you are trying to use. Okay, so looking at that, we would still wait for that break. And then if you want to take some trades in between that 50% area, just be really careful and make sure that it is, I'd say a 1-to-1 is good. You can take a 1-to-2, or you can trade all the way up to your swing high area. But just be real careful that when it reaches those resistance areas, you're going to get a reaction, because those are areas where the market has reacted before. So that is just my general take on higher time frame confluence. This would be a really good trade coming into next week, because all the time frames are lining up with being in an uptrend. You have clean market structure, and you know your price action and market structure and how it works to enter and exit your trades. That's all I have for you today. Thanks for watching.